Much for that. So the WPI data for the month of March is flashing on your screens, and in fact it's come in lower than what the street has anticipated. It's come in at around 1.34%, so it's around 30 basis points lower than our expectation of 1.6%. Remember, this is a multi-month low for the WPI data, which had in any case come in at a 25-month low in the previous month at around 3.85%. So now it has softened further, even much more than what the street was anticipating at around 1.6%. Just want to put it into perspective, we are waiting for the core data as well, and the core could even be a sub 1% figure, which compares to 2.5% in the previous month. Now, it is expected to, the reason for the softening this time round was because of reasons such as a high base plus continued easing in industrial commodity prices. In fact, the CRB commodity index was down by around 0.8% on a month-on-month basis in the month of March. So remember, this ties in quite well with the CPI data, which came in at around 5.7%. Core CPI came in lower than 6% for the first time in 6 months. So maybe this would just be an added incentive for the Reserve Bank of India to probably maintain its whole stance, which it did for the first time since its rate tightening cycle in May of 2022.
We do have some, internal details from the WPI. Fuel and Power Group Index is down about 1.3% on the month. Primary Index is up 1.2%. And the only thing which is actually higher than every other class here is the Vegetable Index, which is up 5.5% on the month. Apart from that, we are seeing significant contraction on the Cereals Index, down about 1.9%. Edible oils down about 2.6%. Manufactured products down by about 0.3% as well. So among the heads that have been revealed so far, we have food inflation, which is at 2.32%, and that's largely led perhaps on account of vegetable index, which is up 5.5%. Manufactured products, edible oils, cereal and fuel and power, all of them have contracted month on month.
I think the RBI preempting a lot of this, right? I mean, they very decisively came out with that pause in the previous policy, and the verdict was out. Now inflation, of course, has started to cool off. So I guess, the inflation targeting was the policy that the RBI had put out. So perhaps anticipating a cooling off of inflation, they have.
And Ekta, we have the core WPI data as well. Core WPI is 0.1%. You thought it would be closer to 1, but it's 0.1%.
It was supposed to come in at a sub 1% figure. So, the data this time round, yes, supported by a base impact and the industrial commodities softening, but nonetheless, this would definitely be more fodder for the Reserve Bank of India to probably continue that whole stance which they started in just a couple of weeks ago when they had the RBI policy. So that's the March WPI data. The food inflation has softened all the way to around 2.3% versus 2.76%. So good going in terms of the data points that are flashing on your screen. Fuel and power inflation down to around 8.96%. It's a single-digit figure as compared to double digits in the previous month. Also, manufactured products is a deflation of around 0.7%. So
also, hats off to the RBI, right? There were so many questions being asked when the policy came through as to what prompted them to pause on rate hikes when inflation continues to be so high. But now, as we progress, the inflation is cooling off quite a bit. I just saw fuel and power inflation has come off substantially compared to what we saw last month. So I guess kudos to them.
Yes, absolutely. But the Reserve Bank of India did say that they are going to be entirely data dependent, and you cannot go by their hold stance which they undertook this time round. But nonetheless, this would definitely be more data for them to probably continue that whole stance. Rupa Rege of L&T Financial Services joins in to discuss the WPI data for the month of March. Rupa, your first thoughts. Score is a sub 1% figure. March WPI is lower than what at least consensus was working with.
Oh, yeah, this is a pleasant surprise, but yes, we all had expected it to slow to 1.6%. 1.34% is way below that. But if you look at the trajectory of global commodity prices, I think both energy as well as non-energy products, minerals, metals, etc., barring precious metals, their prices had, inflation in these commodities had declined quite significantly in the month of March. And since our WPI is very sensitive to global commodity inflation, this is in line with expectations.
Rupa, hi, welcome to the show. What does this mean? I mean, the RBI's verdict is obviously out. They have already gone ahead with the pause mode. But do you reckon that this is a stance that could continue for a while? And do you believe that this is the end of the rate tightening cycle, at least in India?
There is a very high probability to expect that. But, currently we are facing many uncertainties because of, first of all, this OPEC plus output cuts. And in last 1 month, we have seen oil prices again have risen by, $8-9 globally. And our inflation is very sensitive to that. Secondly, we had seen in the month of April, a lot of administered prices have gone up, like electricity, tariffs, etc. Even milk product prices have gone up. So personally, I feel that, before making any inference about the trend, I think we need to wait and watch for a few more observations.
Right. What kind of bearing do you expect this to be on the CPI, which is the data point that, the central bank uses for its forecast? I mean, with this coming in at 1.3% going forward, what are your CPI and WPI expectations?
Yeah, because now base effect will turn increasingly favorable for both CPI and WPI. If you remember last year around this time, because of the breaking out of war between Ukraine and Russia, huge supply disruption had taken place. So most of the global commodity prices had spiked around that time. So, base effect will turn favorable. Luckily, we are also having very good Rabi, crop harvest, etc. So that should have, because in this WPI also we have seen, huge deflation in edible oil price inflation, and food inflation has slowed quite a lot. But you see, we also cannot completely ignore the implications of climate change and climate risks. We are facing a lot of heat storms, unseasonal rains, and perishable prices are highly vulnerable to that. So one has to see, yes, base effect will act as a buffer for coming 2 quarters. So we may not, in very high probability, we may not see early prints for both WPI as well as CPI. Sequentially, there could be some increase, that cannot be ruled out. But you see, overall, YOY inflation numbers will look benign.
Okay, all right, Rupa, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's the word coming in on the WPI March data, which in fact has come in at an over 2-year low. It's a 29-month low, which it's come in at. It's accelerated in terms of the reduction that we've seen in terms of the WPI data as compared to the previous month, which was at a 25-month low. So definitely a positive in terms of what the Reserve Bank of India might do. Remember, they did hold after 6 consecutive rate hikes that they had undertaken. Time for a short break. We'll get you more on the markets and stocks once we're back. Stay tuned.